Okay, we're going to move to the main part of our programming. Dan Lesser is our guest speaker today. Dan is the co-founder, president, and CEO of LW Hospitality Advisors with more than 40 years of specialized experience in hospitality worldwide. He does everything under the sun, from appraisals, economic feasibility, investment counseling, asset management, receivership, and transaction services for all forms of resort properties around the globe. Prior to his hospitality advisory experience, Mr. Lesser held operational and administrative positions with the Hilton Hotels Corporation and Eurotels Switzerland. Mr. Lesser earned his Bachelor of Science degree in Hotel Administration from Cornell and attended the École Hôtelière de Lausanne of Switzerland and Baruch College, City of New York. He is a fellow CRE member, an MAI designated member of the Appraisal Institute, fellow of the Royal Institute of Chartered Surveyors, and a certified hotel administrator. I've been in this career nearly 35 years, and I can honestly say there are very few individuals in the hospitality space that I respect as much as Steve Rushmore, and Mr. Dan Lesser is one of them. So please welcome a CRE and one of our good ones, Mr. Dan Lesser.
Thank you so much. That's very gracious, and I really appreciate being invited. I'm assuming you can see me and you can see my slide deck?
Yes, we can.
Okay, terrific. Well, it's great to be here. I'm going to talk about the U.S. lodging industry as a whole. I have a fairly substantial slide deck that I'm going to be running through, and I'll be going through it fairly quickly. The slide deck is available to anybody who wants it. I believe the counselors will be making it available, if not sending it out. And if anybody wants to contact me with any questions or what have you, my contact information is on the lower left-hand side of the slide. So again, forgive me if I go quickly. This is being recorded as well, so you don't have to take too many notes. My attorney makes me put this disclaimer on every presentation that I make. It basically says don't trust anything I'm saying. Don't make any investment decisions on anything I'm saying. So I've made the disclaimer, and thank you for listening to that. Like I said, the deck is fairly long. In the event that anybody falls asleep, I'm always happy to sort of present the summary of the findings first, so that you get all the highlights. The bottom line is that the lodging industry is doing phenomenally well, despite all the noise in the background. That there is quite a bit of noise. When you think back, not that long ago, we were in the depths of COVID, and the world was shut down, and the lodging industry really took it on the chin. It's done an amazing comeback since then. Revenue per available room, also known as RevPAR, and it's the simple math of occupancy times average rate, continues to rise. Demand is outpacing supply. Leisure demand is what came back first when people started traveling. It was drive-to leisure during the depths of COVID, and then as we came out of it, people started getting on planes, and corporate business came back. Group meeting business is back. Domestic leisure has weakened a tad since the world has opened up, as a lot of folks now are traveling overseas, which is a great thing for the travel industry. But it's put a little bit of a crimp on the U.S. hotel business. There are two major metrics in the lodging sector. There's occupancy and then ADR, which is average daily rate. Occupancy has pretty much peaked out, and we're going to go into the depths of all this with future slides. But average daily rate is really where the opportunity is for the sector. There are definitely inflationary pressures that are existing on the expense side. That's the bad news. The good news is that with hotels leasing up guest rooms every single night, and with technology being what it is, the ability to change ADR, or average daily rate, by the nanosecond is what actually happens. And during a rising market, it's a terrific thing. In a declining market, it can hurt you. There have been quite a number of permanent hotel closings. We're going to be talking about that. Some diminishment of new supply. It is interesting that in the lodging sector, people talk about new supply, but they don't talk about net new supply like folks do in other commercial real estate asset classes. Transaction volume has definitely slowed, no different than other commercial real estate, but that is more to a differential between bid and ask, as opposed to a lack of liquidity. There's a tremendous amount of liquidity. I'm going to be getting into that. There's an anticipation that beginning this year and going into next, transaction activity is going to be very much catalyzed by financings that are coming due, and there is a wall of maturities that are coming due that something's going to have to happen, either a refinancing at higher rates than debt was originated at, 5-10 years ago, or there's going to be a sale or a workout of some type. Investment dollars coming into the space are definitely prioritizing acquisitions as opposed to construction. We're going to talk about that. It's really interesting. Hotels are now considered a mainstream investment asset class. And when I started in this business, hotels were a stepchild to, the classic segments within commercial real estate. Today, hotels are perceived as a more desirable asset class than office buildings in many markets, which is kind of mind-boggling when you think about it. Capital is not only domestic capital is available for lodging investment, but it's coming in from all over the world. In spite of all the challenges that the United States has, it's still the safest place on the planet for folks to invest. Everybody wants to visit here, be here, invest here. We're seeing a lot of first-time hotel buyers coming in, which definitely signifies a rising market, because that's when they tend to come in. I mentioned a minute ago that there's a wall of particularly CMBS debt that's coming due within the lodging sector that's going to definitely force transaction activity. For some reason, this slide didn't come through, but I'm going to be going into strengths, weaknesses, opportunities, and threats for the sector. I'm an optimist at heart, so I'm going to swap opportunities and threats and finish up with the opportunities. But as a backdrop, just sort of talking for a minute about the state of the economy. I'm not an economist. I'm not offering an opinion about where the economy has been, is, or is going. But clearly, the way the economy goes drives the way the lodging sector goes. And the fact is that the U.S. economy is strong. It grew the last quarter of last year, it grew all of last year. We've been hearing for probably 2 years now about an impending recession. It's the longest predicted recession that I can ever recall. And the pontificators claim that we're not in it, and we're probably not going to get there. So that's an interesting phenomenon. Where are we at this point? It seems that inflation is cooling. What the Fed has been doing seems to be working thus far. It's the economy is really humming along quite nicely. From a statistical perspective, the primary factors that impact the lodging industry, clearly GDP, jobs growth, corporate profits. And this is a statistical analysis of what the outlook is for the near future. It is interesting that corporate profits are anticipated to tail off here. But consumer confidence is anticipated to remain, in fairly positive territory, although, muted for the most part. The bottom line, real GDP growth is increasing. I remember in the early 90s when we had negative GDP growth. So everything's relative in life. And speaking of relativity, interest rates, lots of talk over the past, 18, 24 months about how high interest rates are. And yes, they are high today compared to where they were 18, 24, 36 months ago. But when you look back over 40 years, they're kind of right at the long-term average. So again, everything's relative in life. Commercial real estate, I'm going to only take 1 quick minute and talk about it. Clearly taking a hit. There's no question about it, particularly the office segment. Hotels being considered commercial real estate are part of sort of a little bit of negativity that's out there vis-a-vis commercial real estate. But in the grand scheme of things and on a relative basis, hotels are the most desirable commercial real estate asset class at this point. Okay, drilling down to the lodging sector, the hotel business has really never seen better days in terms of all the key performance indices. There's a lot of optimism in the air. Hotel folks tend to be optimistic to begin with, but there are some solid reasons for this optimism. Sorry about that. I mentioned a minute ago about drive-to travel. The resort markets, drive-to from major urban markets were the first ones to rebound. The 24/7 downtown urban markets, whether it's New York, Boston, Chicago, these markets really took it on the chin because nobody was traveling, but they've come back quite nicely. There are some markets that are challenged, like downtown San Francisco, which candidly, I think that's where the opportunities are, but I'm going to talk about that later on. In terms of operating margins, GOP PAR is gross operating profit per available room. We're pretty much back to pre-COVID levels. When we look at the individual projections for occupancy, average daily rate, and RevPAR, revenue per available room, which again is the simple math of occupancy times ADR, all good news in that everything's anticipated to continue to increase. The bad news is that on a inflation adjusted basis, we're still below pre-COVID levels. But it anticipated to get back to parity right around 26, 27. The other thing to note, too, is that the various chain scales, whether it's luxury at one end or economy at the other, and then everything in between, all the chain scales are recovering and in positive territory. So that's a good thing. I mentioned a minute ago about the markets that are haves and have-nots, and big surprise here on the right-hand side, the right-hand table. The lower right-hand corner, South Florida, Arizona, boom markets doing incredibly well. On the left-hand side, San Francisco, Washington, D.C., Philadelphia. These are markets that are definitely being challenged, but probably where there's a lot of opportunity because everything is about basis, and we're going to talk more about that. I mentioned a minute ago about profit margins. They're fairly healthy. They've ticked down a tad compared to 2022, but only a slight amount. Again, demand on the increase, average daily rate rising, revenue per available room rising on a nominal basis, but on a real basis, when it's adjusted for inflation, there's still a little bit of runway to go. But it looks like we're going to get there in the next year or two. Transaction volume, I mentioned a minute ago, has absolutely slowed. But that is, again, not because of a lack of liquidity, but rather there's a big delta between bid and ask. That delta is starting to narrow now that interest rates are ticking down. And when transactions are going to be forced to happen, we're going to have a fair amount of price discovery and candidly capitulation. And we're going to see more and more transaction activity going on. Okay, I'm going to dive into the strengths right now. There are a lot of strengths. The public hotel companies, whether it's Marriott or Hyatt or Hilton, they're all very, very positive. They're all demonstrating some really good profits, and they're all anticipating more of the same going on. Consumer confidence, it's remarkable. It's quite strong, although we may be approaching an inflection point where the increased interest rates are maybe finally catching up with consumer sentiment, but it hasn't happened yet. And Americans, they love to travel, and whether they can afford it or not, they're going to do it. One of these headlines that I find quite interesting is the second one from the top on the right. Diamond prices are down as people spend more on travel and food. Something interesting to think about. I mentioned earlier that all the demand segments, whether it's corporate, individual, group meeting, leisure travel, they're all back quite nicely. And, it seems like it's going to continue. The notion of $1,000 a night for a hotel room used to be unheard of. It's becoming much more of a new normal within the luxury sector. So again, a lot of positivity. The group meeting business was decimated during COVID, has come back very strong. If you've gone to a convention lately, I've been to a few hotel investment conferences, and they're all sold out and having record attendance. Interesting phenomenon is that Blackstone bought a company called Cvent. That's the top headline on the right. It's an event software provider Blackstone made a pretty big bet on Cvent, and I think reflects very much on their positive outlook on the meeting space. The airline industry is on fire. They can't make planes fast enough at this point. I shouldn't have said on fire, but it's very, very strong. And if you think about it, when was the last time you were on an airplane that had empty seats? That doesn't really exist all that much. And then the pricing for airfare is really expensive and going up, and that's a really terrific drag for the hotel industry to take advantage of, and they clearly are taking advantage of. Rising interest rates have absolutely had an effect on new development, and new development is fairly muted. It's anticipated to remain fairly muted. Labor costs are high, construction costs are high, and then, of course, rising interest rates. I mentioned a minute ago about hotels that have closed permanently. There have been a slew of them that have closed for conversion to alternative uses, whether it's migrant housing, housing for the homeless, or hotels that are just physically and functionally obsolete that have permanently closed and are being scraped for development of alternative uses that may include a hotel, may not, could be a mixed-use project that also may include may not. And again, I said earlier, it's quite amazing that hotels, which in the past have been considered as the riskiest commercial real estate asset class because of constant repricing and constant releasing of guest rooms, used to be considered to be a higher risk when compared to office buildings, right? And if you think about it, a 10-story office building with 10 floors that have 10 tenants with 10-year leases, once you lease up the building, you pretty much figure out what your revenue is going to be. And the expense part of the equation is, fairly easy, and it sort of becomes an annuity, unlike hotels, which are not far from annuities. And yet today, office buildings are kind of a dirty word. So very interesting phenomenon. We've heard a bit about the lack of financing for commercial real estate, and that's dribbled down into the lodging sector. The reality is that there's been a ton of financing available and continues to be available, all types of financing. This is just a handful of examples that just this year, and the year is 45 days old, of refinancings that have occurred for a variety of institutional hotels across the country. Again, more refinancing that's occurred within the past 45 days. It's quite remarkable. Acquisition financing, this is just part of the second half of last year. If I had all of the second half of last year and candidly all of last year, I would probably have a dozen slides of various deals that have occurred where acquisition money is clearly available for deals that make sense. Again, second half of the year, some significant acquisition financings that have occurred. Construction financing. There definitely is not nearly as much construction financing today as there was not that long ago, pre-COVID, but there is financing for deals that make sense. And again, here's a whole slew of construction financings that have occurred second half of last year. And when we look at the first 45 days of this year, there have been two fairly significant investments made by lenders and brand name lenders for new products that make sense in certain markets. So again, everything's available at the right price and for deals that make sense. There's been a bit of M&A activity in the space on the real estate side. The latest big deal to occur was Hersha Hospitality, publicly traded REIT, was taken private in a $1.4 billion deal by KSL. That deal closed only just a matter of a couple of weeks ago. We're also seeing a fair amount of M&A activity within the hotel management and the brand company space. One of the big ones that everybody's talking about these days is Choice Hotels. At this point, it's an attempted hostile takeover of Wyndham Hotels and Resorts. If it does happen, it would end up creating probably one of the world's largest hotel companies from a distribution standpoint. There is a big question as to whether it will happen or not, but the deal is still very much in play. Continued strengths for the segment. We're seeing some fairly large single asset trades, whether it's the Park Lane in Manhattan at $623 million, or the hotels in New York City and other major urban markets. Boston, you have the Renaissance Times Square that recently traded for, in excess of $100 million. We've had a couple of trades of $1 million plus per room. Again, the Park Lane in Manhattan. It used to be that $1 million per room trade was sort of unheard of, and we're now seeing more and more of those happen. Last year, we saw a handful of trades at between $800,000 and $1 million per key. Lower right-hand corner is the Whitney Hotel up in Boston, traded for over $900,000 a room. The middle at the bottom is the Liberty Inn in Manhattan. That is a development site. The property was what they call a hot sheet hotel by the hour, but it's a development site and sold for over $800,000 a room. When you look at some of the investors that are buying hotels, a number of these folks are hotel-centric investors. That's all they do is invest in hotels, whether it's Apple Hospitality REIT, Diamond Hospitality, Electra America Hospitality, Peachtree Hotel Group, MCR. These are smart, sophisticated groups who know and understand the lodging industry, and they're making significant investments in the space, which should say something about the outlook for the space. Moving on to weaknesses. I mentioned earlier the American consumer is starting to feel the pinch of elevated interest rates. We're not seeing it across the board, but we're starting to see bits and pieces of it. Now that rates are coming down, we're hopefully going to skirt any sort of recession. I'm not saying we will, but generally speaking, the American consumer looks good, but there are definitely weaknesses when it comes to that. I mentioned earlier about domestic travel came back extremely strong during COVID, right after COVID, when people could get out of the house. But now that people can go around the world, Americans are traveling abroad, and international travel surprisingly has been a little bit slow to come back, particularly from Asia and particularly from China. So that is a weakness. The work from home phenomenon, I candidly believe that the notion of 5 days a week in the office is never coming back. When you look at some of the metrics out there and Castle Systems, they sometimes get a knock because they don't necessarily have the best population that goes into the calculation of their data, but it's pretty good data nonetheless, and it's been hovering around 50%. Back in the office. And so that is definitely a weakness for corporate individual travel. Because if you think about it, if folks are not in the office, then people who want to pitch business to them are not coming to visit them in their office. That's the bad news. The good news is that companies that are allowing any sort of work from home, whether it's 3 days a week or 4 days a week or 5 days a week, these companies are also realizing that they need to have more in-house meetings, group meetings, and attending conventions, because there's nothing like face-to-face contact, and people need to get together. A big weakness for the lodging sector, unfortunately, is cleanliness. During the depths of COVID, every hotel brand was coming out with a cleanliness assurance program. It was front and center. It was a big deal. Today, I think that's sort of fallen by the wayside, and yet the headlines are what they are, that it's still a challenge for the lodging sector. So something that is being worked on and clearly needs to be worked on. Insurance expenses, this is not just for hospitality, but insurance. There are some markets where you actually cannot get insurance in the Southeast United States. And I've seen a number of hotel properties that are performing from an economic perspective, servicing their debt, and yet they're in technical default because they just can't get insurance. So that's an interesting phenomenon. Again, not just restricted to hospitality. I wouldn't be surprised if we see the U.S. government step in at some point to have to deal with this. There was a banking crisis, what was it, March of last year, where we had a handful of banks go, out of business, one after the other. There's talk about more of that coming possibly, and if it does, that's not a good thing for available financing for all types of real estate, including hotels. Capital expenditures are a big challenge for the lodging sector. During COVID, all the major brands were everybody played nicely in the sandbox, whether it was the brands enforcing product improvement programs or lenders, candidly. But those days are over with, and so now there are no shortage of hotels in America that need starved for capital, and the brands are coming down now and requiring that these monies be injected. And that's going to be another opportunity for investment coming into the space, because there are sponsors out there who just don't have the money to spend and may need to bring capital partners in to help effectuate these renovations. Kind of mind-boggling, but visas are very difficult for foreigners to get, for those that require a visa to get into America, and the U.S. government has been a little bit hamstrung in terms of figuring this out and getting a lot of pressure to figure it out. But it's definitely been a weakness. There have been, some countries where travelers are saying, you know what, I'd love to go to the United States, but I can't get a visa. It's too much. It's too difficult. So I'm going to go somewhere else. That's something that definitely needs to get fixed. Crime is not a new phenomenon. Hotels have always been a magnet for crime. But the lodging industry is very much focused on staying ahead of that and combating it, particularly trafficking of humans, which is a horrible thing. The American Hotel and Lodging Association, the AHLA, which is a terrific organization that represents the hotel industry in Washington, really does amazing work, and they're at the forefront of making sure that hotel owners and operators know and understand and combat human trafficking, because it's a terrible thing. And it's a stain, candidly, on the industry. Weaknesses for the lodging industry. This is one of my favorite topics. There are just too many brands in the lodging sector, and it can creates confusion. These are some of the new brands that have just occurred in the past couple of months. And when you think about what do these brands mean, right? Outbound Hotels, Mod, a Sonesta Collection. Without naming names, I will tell you that I have spoken with franchise salespeople in the lodging sector who have admitted to me off the record that they could not tell you the difference between brand X and brand Y. So if they don't know the difference, I don't know the difference. How can the traveling public know the difference? And this headline says it all. Confused by all the Hiltons and Marriotts, us too. And so that's a problem for the sector. Another challenge is that you're getting all these retailers and other brands out there that are now getting into the space, whether it's Karl Lagerfeld or Sports Illustrated, Louis Vuitton. My wife's going to love that one. It is kind of interesting how we're now getting, brand introduction from outsiders into the lodging space. Not a good thing. I talked about the banking sector. That's, it's not a good thing. These are recent headlines. The one on the bottom is just a couple of days ago. The banks are not okay. This is a threat, not just for lodging, but for all commercial real estate. Hopefully it doesn't come to pass. I talked about the consumer student loan repayments that were forgiven, or not forgiven, but kicked down the can. The can was kicked down the road in terms of allowing folks the ability to pay that back. That is now gone away, and student loan repayments are back. Credit card delinquencies and car loan delinquencies are rising. So definitely a threat to the consumer, which would be an ultimate effect if it gets much worse. Hopefully it won't on the lodging sector. Supersonic transport, it's here. It's happening. Pretty soon you're going to be able to listen, we had supersonic transport 25 years ago with the Concorde. The problem was it was expensive, it was dirty, and then there were some horrific, actually, accidents that where people died. But pretty soon you're going to be able to fly to London from New York in just under 3.5 hours. So if you think about it, you'll be able to fly to London, have lunch, have dinner, and fly back and be home in time to tuck your children in bed in the same day. Well, that's not a good thing for the lodging sector. And several of the major airlines, whether it's United or American, have placed orders for supersonic transport that's going to be delivered in the next couple of years. Again, great for the traveling public, but not great for the lodging industry. The world is going to have 64 elections during this coming year. So, pretty interesting that is happening, including here in the United States. Presidential election, there's divisiveness in America. These are not good things. Hopefully, everything's going to work out and people are going to remain calm. But government shutdowns are another threat. These are not good things for encouraging whether it's corporate business, leisure travel, or group meeting travel to occur. These are definitely threats. And then, of course, there's the notion of war, right? We're seeing it happen right in front of our eyes, right? In Europe, in the Middle East, and we're living in scary times. So, hopefully, again, everything gets settled down, but these are definitely threats to the lodging sector. There's no question about it. Unionization of labor is a phenomenon that's taking hold in America, again, not just in the lodging sector, but it's been fairly prevalent in coming back with a vengeance in the lodging sector for the past couple of years. It's now bleeding into other segments. And listen, there's nothing wrong with unionization, but it clearly affects the economics of running hotel operations. It's not an opinion, it's a fact that all things being equal, a hotel with union labor versus a hotel with non-union labor experiences higher labor costs. And it has to do more with the work rules rather than the wages. But it is a phenomenon that's continuing to spread across America, and it's creating challenges for the sector. Government regulation. I'm very happy that the current presidential administration is focused on taking care of junk fees, such as resort fees or what do they call them? Destination fees. I'm being sarcastic that I'm happy about that, but the government clearly is getting involved in looking at all sorts of things. There was a referendum in the county of LA that was turned down. That if it had passed, it was going to require every hotel within Los Angeles to report empty rooms during the same day, right? So by noon, they were going to have to report how many empty rooms they were going to have that evening. The municipality was going to hand out vouchers to homeless folks, and hotels were going to be required to take homeless folks for intertransient accommodations. And if this referendum passed, there was an element to it that was also going to make hotels intersperse these guests throughout the hotel, right? So think about it. You're staying in a luxury hotel at a Ritz-Carlton or what have you, paying a couple of $100 a night, and there are homeless people being interspersed within the building. That's a real problem, and it could have been a real threat for the lodging sector. So again, the point is government intervention. You never know what's going to come up. COVID is hopefully behind us, although there's talk about different variants, coming around. It's kind of scary. And you look at the lower right hand, China seems to be leading the pack always with this stuff. This is a headline from not that long ago, housing another deadly outbreak in Chinese hospitals back in November. So hopefully this is behind us, but it's still a potential threat out there. Cyber activity is a problem for the world. The lodging sector is a magnet for cyber activity, because if you think about all the data and information that is housed within hotel companies and individual hotel properties, names, addresses, credit card information. And we've seen, just in what was it, November, December, or early in the second half of last year, whether it was MGM or Caesars got hit by cyber activity in Las Vegas that really cost them dearly. One of them actually paid ransom, the other did not, but it still costs money to get back, get your systems back, even if you don't pay the ransom. So this is a big issue for the lodging sector that's being addressed, but it definitely is a threat. Climate change, again, not generic to hospitality, but it does kind of amaze me. South Florida, particularly Miami, There's talk about Miami being underwater in the next 10, 20 years. It does amaze me about the amount of money that's flowing into that part of the world. I don't know, maybe Tony can talk a little bit about that, but I tell you what, hotel investors are pretty bullish on South Florida. Great markets from a demand and supply perspective, but listen, if you're a long-term holder, it's something you definitely ought to be thinking about. I think that's probably part of the challenge in that most hotel investors are thinking 2, 3, 5-year holds, 7-year holds, which could be a dicey proposition, and they probably anticipate that climate change will be the next guy's problem, but we shall see. Opportunities. We're moving into opportunities. I mentioned earlier about airfares. Car rentals, very, very expensive to travel these days. Well, that's a tremendous opportunity for hotels to get right behind and be aggressive with their pricing. Dynamic pricing is definitely revolutionizing the hotel industry, and this is all technology at work. I mentioned the wave of securitized debt that's coming due. There's going to be a ton of it. On the right-hand side, we see institutional deals where the keys have already gone back to the lenders, and we're going to see more and more of this as time goes on. This is not issues with the hotel operations necessarily. It's issues with debt that was originated at half the cost of where it is today, and the ability to refinance debt is challenging for existing sponsors to keep equity and remain whole. I mentioned the surge of first-time hotel buyers. There's a rash of them coming in. That tends to be a reflection of a rising market. There's so much money out there on the equity side and the debt side. This is just a smattering of institutional investors that have raised monies to invest in commercial real estate, but many of whom are targeting specifically hospitality. So, very, very interesting that what's going to happen essentially is you're going to have these distressed induced transactions, but the deals that have compelling stories to them, because of all the debt and equity out there, they're going to get bid up. And so you'll have distressed induced transactions that will not necessarily reflect distressed pricing. The major urban 24/7 markets that were pre-COVID the darling markets and became the dogs after COVID, that's really where the opportunities are right now. And I think New York is a poster child for it. When you look at during COVID, everybody wrote New York off. It was done forever, right? And New York, I just walked through Times Square coming to my office earlier today. It's back and some. The hotel industry in New York is incredibly strong. You've had a lot of hotels come offline because they've been converted to migrant housing. New supply, there's still a bit of it that's coming online in the next year or two. Once that all gets absorbed, we're not going to see new supply in New York for the next 5 to 10 years because there's a new referendum that in order to build in New York, you need what's called a special permit. The special permit essentially is going to require union labor to construct and union labor to operate. That's going to affect the economic feasibility of new construction for a long time in New York. And so the city is now running 80+% occupancy. Room rates are increasing dramatically. During peak nights, if you want to stay in a select service hotel, a Fairfield Inn, a Courtyard, you can. I'm sorry. Hello?
I think that was just background noise, Dan.
Okay, I'm almost done. I'm gonna wrap this up here. I mentioned a minute ago about New York City and the comeback. San Francisco is taking a tremendous hit right now. I candidly am very optimistic about San Francisco on a long-term basis. And when I say long-term, I'm saying 10 years. I think if you buy today at the right basis in San Francisco and you're ready, willing, and able, if need be, to hold on for 10 years, who knows? It may come back sooner. And if it does, it doesn't mean you can't exit and bake in compelling returns in year 3, 4, or 5 if that opportunity bubbles up. But if it doesn't bubble up and you're ready to hold for 10 years, I think there are going to be some tremendous deals to be had. Coming back to New York 1 second, I love the sale of the Sheraton Times Square, a big convention hotel, 1,500 rooms, traded about 24 months ago for $200,000 a room. Big hotel. You couldn't replicate that hotel for multiples of that amount. That was bought when the market was not really all that strong in New York. Today, it's worth a lot more than $200,000 a room. And the way I see that transaction is the sponsor basically bought an option, because at the end of the day, how could it ever be worth? How much less could it be worth, right? I mean, it's an amazing piece of land just north of Times Square. It's a full city block. The land's got to be worth $200,000 a key. You know, other opportunities, I mentioned migrant housing. It's been actually a boon for the lodging sector. You've also had large, big box hotels that are functionally obsolete. Take wings, whether it's the Sheraton in Boston or what was the Fairmont in San Jose, and take certain wings and convert them to student housing and, you know, downsize a hotel. So there are all sorts of opportunities. There are all sorts of revenue opportunities for the lodging sector. Parking fees. I mean, that's something that's so simple, right? It's real estate that, if you think about it, why isn't every hotel charging for parking? Electric vehicle charging stations. It's amazing how the hotel industry has been a little bit slow in terms of embracing putting those in hotel properties, but there are definitely all sorts of profit-making opportunities, revenue-making opportunities that the sector is looking at. Innovation through technology. The hotel industry notoriously has been behind the 8 ball in terms of creating and embracing technology. COVID has changed all that, and the sector has gotten much better in terms of embracing it. I think what you're going to see happen fairly soon is the lodging industry creating all sorts of technological advances instead of paying for outsource groups that create these opportunities. Online travel agents. I mean, there's an example of technology that when it came around, you know, back in 10, 12 years ago, and it was in the depths of the Great Recession, the lodging industry thought that online travel agents were the greatest things in Swiss cheese, until they realized that they had given up their most valuable commodity, which is the guest, the head in the bed. And it was being controlled by these technology companies that didn't have any investments in the hotel space. Anyway, there's been a big struggle since then to take control of the guest and have travelers book direct. Candidly, I don't understand why anybody would book through a third-party channel as opposed to booking direct, because if you have a problem, then the hotel is going to tell you, well, talk to the booking agent, don't talk to me. So I always book direct. Airbnb.
Hey, Dan.
Yep.
Dan, do you mind? Because I want to allow like 3 to 5 minutes just for questions. I know you're like your last slide or two, but I don't want to lose everybody. We're not going to turn the presentation off, and we're not going to necessarily like cut this off exactly at 4 o'clock. So if anybody wants to stick around for questions, I certainly want to encourage it. If you want to close this last slide, because I thought that last slide was excellent. You know, basically saying that the chief executive officer of Hilton says in the long term, things are going to be spectacular because basically people want to have experiences, and that's kind of built into our core DNA now. And that, you know, mobility is the hotel industry's friend. Best thing we could do, obviously, is to have an expert from New Jersey or therefore New York to do 2 hours worth of material in 35 minutes. Thank you for hitting the time. Very much appreciate it. I want to just open it up to questions. If anybody has questions, wants to hang around. I also want to say, though, before we close, for those of you that have to jump at 4, thanks for coming. For those of you that think the hotel industry in New York is dead, make sure you sign up for the CRE's national meeting in New York City in September. We're going to have a bigger impact on New York than Taylor Swift. So I'm looking forward to seeing everybody. And I think I'll just open it up for questions. Larissa, is everybody unmuted so that they can just ask, or do they have to like hit something to unmute?
They can unmute themselves, but I'll see if I can do everyone.
Okay. Anybody have any questions for Dan?
Just a quick question regarding the difference between the business hotel and the leisure hotel. Do you see much difference in valuation, pricing, sales prices, et cetera?
It really depends on the specific asset and the market that it operates in. I don't think you could generally answer that question one way or the other. The hotel business always has been and always will be a street corner neighborhood business, and it's classic location, location, location. So it's not that one is better than the other.
What about the convention business, Dan? I mean, you mentioned the business travel. Is that tied to the convention business as well? You're not just talking about business to business. Like, is the convention business back too?
Absolutely. I mentioned earlier the convention business is back with a vengeance. I was at a hotel investment conference at the end of January, the America's Lodging Investment Conference. It's one of the two largest hotel investment conferences in the world. There were 2,700 people. It was a record in Los Angeles at this conference. Every convention I go to, it's packed. People are traveling again. Absolutely. The convention business and the forward bookings look really, really strong.
It's almost like we had this period of revenge spending where the consumers went out and spent because they weren't able to go to the stores. And I feel like on the business side now, it's the same thing. There's like revenge conferences. Everybody wants to go to every conference. We missed everybody.
And
right?
not
We
only
missed the
that,
interaction.
right. And not only that, listen, when you're pitching business, it doesn't matter what you're pitching, right? The folks that show up and press the flesh, right, face to face, compared to those who do it via Zoom, who wins the business, right? So you got to get out there. You got to see people. Human beings love to, be connected. That's
Other
not going
questions?
away anytime soon.
Thankfully. Other questions?
I have one question. You mentioned the remote work environment kind of harming hotel demand because workers or I guess workers are not going to other offices, but then also helping hotel demand because people who are fully remote maybe going to conferences more or checking in once a quarter. Kind of net, have you ever tried to estimate or run the math on that or figure out, is remote work, is this new world positive or negative for hotel demand?
Great question. I have not tried to figure that out. I'm not aware of anybody else who has tried to figure it out. But the bottom line is that if you look at the demand for transient lodging accommodations, it's incredibly strong. So, people are traveling again. The mix of business is what's changing and hasn't stabilized as of yet, right? So I think when we look at stabilization, corporate individual travel probably will never get back to where it was, but I wouldn't be surprised if we see group meeting and convention travel go higher than where it was. And leisure travel absolutely is exceeding where it was, and I think COVID was a lesson for many to sort of realize that life is short, right? And you might as well enjoy it while you're here. Again, whether you can afford it or not.
I have a question. I'm concerned about the quality of assurance of these major hotels. As we're seeing here, these webinars are gaining importance, and we don't have to spend the excess dollars for those rising plane tickets and so on. So I'm kind of wondering if we're in a transition here where we're desperate to see one another, but we may have to dumb down to more use of webinars. What's your feeling? I know it's negative to the housing or the hospitality industry, but I just get a feeling we're trending here.
It's an interesting comment. If you think about it, video technology has been around for 20 years, right? Skype was around way before COVID. It's really not a new phenomenon, except that it was incredibly embraced during COVID, right? And now it's like Kleenex, right? It's part of the fabric of who we are and what we do. But I have to tell you, I'm sitting here right now in a conference room. I'm looking at a screen. I presented at this convention that I attended a couple of weeks ago in front of 2,700 people. There's something very refreshing about presenting in front of an audience live as opposed to looking at a screen talking to myself. Although I know I'm talking to 50 or 100 people here, it doesn't feel the same. And it can't possibly feel the same for people that are listening either. And hence, Tony mentioning that later on this year, the councils are going to be meeting in person in New York.
I
Yeah,
have to agree with you. That's good.
I'll also weigh in on that, Wayne. I think although we don't have measurements, I think from my corporate perspective and even association perspectives, the associations have cut down on the number of meetings because it has gotten expensive, and expecting people to come 2 times a year or 3 times a year, has an impact. But at the same time, they're increasing the amount of these webinars, et cetera. But then when we do go, you're going to spend almost as much money on that one trip as you spent on 3 trips, in the past. Right. So it's kind of like it's allowing us to save up the dry powder and then deploy, at a number that's 2x or 3x what we normally would have spent. We're still spending the money. It's just we're spending it in a more targeted manner. I don't know, what the overall impact of that, but I see it at my corporate level as well. We've reduced our number of in-person meetings, but then when we have an in-person meeting, it tends to be, bigger, larger, much more heavily invested in, because we know this is the only meeting we're going to have this year. So we have to blow it out. And so we, on net, probably spending about the same amount.
Good.
Other questions?
Thank you.
Thank
Yeah,
you.
and you talk about the challenge of the cleanliness assurances. I assume that has a lot to do with staffing. And I just wonder if there's any solutions that you could see even in the near term with that issue.
Staffing definitely, there's no question about it. And it's not just the sort of the housekeeping department. It's at every level and throughout the lodging sector. Yes, it clearly is in part due to that. The sector didn't have the greatest reputation for cleanliness pre-COVID either. How about that? It's unfortunate. I personally am somewhat surprised. I'm a little bit of a germaphobe, and so I do check for cleanliness the minute I check into a room. I check for bed bugs. All this stuff has been around for forever. It's not a new phenomenon. If you think about it, it's a challenge to. There are a lot of people coming in and out of hotels all the time, right? And it's a challenge, keeping up with the with cleanliness. Doesn't mean it can't be done, but it's an issue for the industry. There's no question about it. But people are still staying in hotels. I'm still staying in hotels. If I happen to be in a dirty room, or I'll ask for, to stay in another room, but it's not stopping me from traveling.
All right, last question. Anybody want to close it out? All right, hearing none. Dan, I want to thank you so much. I know Cindy had to jump off before, but I want to shout out again. Thank you, Cindy Chance, for joining us today. It was nice to be the last and closing Valuation SIG, was the closing part of SIGapalooza. I look forward to seeing everybody in New York, and as well as, on Zoom the next time. Dan, thank you very much once again.
Thank you.
Thanks to Robbie Tanjung, my co-chair at SIG. Last closing thought is, if you guys want to hear from anyone, or you wanted to hear anything specific on this Valuation SIG, send Larissa an email, send me an email, send Robbie an email. We'll set it up. We'll have another 2 or 3 of these webinars throughout the year. And I want to thank everybody for coming today. So thank you very much.
Thank you, everyone.
Thank you.
And
Take care, everybody.